This happens a lot. It's something that actually happens a lot with inexperienced tax preparers. Is your instinct may be, and I'm not saying your, like our instinct as a newer tax preparer is like, okay, I'll just write off as much as I possibly can. I'll section 179 the entire amount for $50,000. But you can see if this is a startup business, or say the person not having that much income, their tax rate in that first year literally could be 0%. So you're putting a $50,000 deduction here, and the person is getting a 0% and $0 tax savings. So that is obviously not going to be ideal. Now, the person may recover back some kind of tax benefit if they have like a net operating loss that includes this amount and it's carrying forward to these other years. So I realize this is kind of a simplified example, but it's something that does happen quite a bit. Or it could be bonus depreciation is included in this first year. And again, but the value of that deduction is not that much. And you can see if the business is to get profitable over the coming years, the tax rate likely would go up. So the value of that deduction is actually going to be more as the business's profit goes up. So you want to be more strategic about how you take that deduction. And let's say it's a 5-year useful life for that asset. You have the ability to divide this deduction over 5 years. So if you had $10,000 you took the first year, and then you take $10,000 all the other years, you can see all the tax savings that would come into play. And so essentially by pushing off that deduction into future years, that hopefully the business grows, will be more profitable, then you're actually coming away with a much greater tax savings than if you push, let's say, bonus depreciation into the first year, right? And then you have less deduction for these higher tax years.